Finally, roughly 1 week after the Terra Luna and UST collapse, we now have detailed on-chain blockchain data of what actually went on. We've got various charts around the events, and we also have got detailed data on its long-term impact, as in how might the Bitcoin market, how might the stablecoin market be influenced by this. So we've got a lot of things to cover. Without further ado, let's jump right in. Hi, so this is a very extensive video. We've got 13 charts here that look into the details of who has sold, who has bought UST, how did it all develop over time, how did the balance on exchanges change, and what is currently retail doing with Bitcoin, how might institutions react to all of this. All of that supported by data, all of this supported by historical charts. So let's start with the very first chart, the Luna and UST deep pegging event. In green, we see the UST price, right? The right axis over here shows the UST price. And in pink, we see the Luna price that then subsequently collapsed and got inflated into infinity, approaching zero. Now, I've done several videos on Luna, and for me it was pretty much clear that the deep pegging would be final after we saw the second crash over here. The first crash was already massive, right? We went down to 70 cents. Temporarily, I think it was 62 cents even. Then we could recover to a certain degree. But then when the second sell-off happened, this is where I made my warning video. This is going to be permanent. And this was somewhat foreshadowed with the Luna price already falling quite a bit. And what was particularly interesting was already at this point in time, we saw the market cap of all of Luna not being able to cover the required burning to get the peg back up. So that's essentially what's happening, right? If you want to support the UST price, you have to inflate Luna, you have to take value away from the Luna holders to get back to the $1. And at this point in time, we already had the requirement for a potential white knight to step in, for external investors to step in. This in the end did not happen. And so all of the value of the Luna holders went to the UST holders. The UST holders, the people that invested in Anchor, they had a longer time window to somewhat save at least partially their investment, right? The Luna holders, they got simply just crashed. There was no way to make any money from this besides shorting Luna, of course. If you understood this early enough, if you understood the tokenomics early enough, and you saw this inflation coming, then of course betting on a falling price via futures contracts on a centralized exchange such as Binance would have made you quite a bit of money. So there's always opportunity in chaos. You simply have to be prepared enough. You simply have to know what you're doing. Now, this is looking at it in a bit more detail in the supply curves. So money was flowing out of UST. It started off with 18.7 billion, roughly 7.5 billion went out of UST, and this was then creating all of this inflationary pressure to the Luna token, meaning the Luna supply went up massively, right? From 343 million all the way to 6.5 trillion. Now, there was the hope that the Luna Foundation Guard with its Bitcoin holdings could potentially support the price. They could sell off the Bitcoin and take all of that value to get the system back into shape. This is how this looks like in detail. These are the holdings, the Luna Foundation Guard balance of Bitcoin. So we see the accumulation accelerating here at the end of March. And then in 3 very large transactions, that balance was completely sold off. So a classical case of buy high and sell low, unfortunately. But that's kind of like the idea, right? This was the idea. When times are tough, you want to have this kind of a treasury to support everything. We know now that this unfortunately did not play out. Now here's the situation in a zoomed in format. So on the 9th of May, we had a 700 million US dollar sale. Then a bit later in the day, another 916 million. And then on the 10th of May, a bit after midnight, a similar size, 873 million that got sold off. Now, there is speculation around if this money is still in the hands of the LFG or if this has actually been used for stabilizing the price. Some people say that the money went into the pockets of some whales. Other people say the money is still in the hands of the guard that could potentially maybe pay off the smaller holders, right? There is this proposal that could reimburse most of UST holders with those BTC holdings. The problem is it's not yet transparent where this money actually is. These 3 sales over here, they have been OTC sales. So this happened over the counter with Gemini and with Binance. And so what we can see is that this money actually did not yet hit the order books. What we instead see is that the balance on exchanges shot up. Now this is interesting, right? All of this inflow from the LFG, the balance on exchanges went from 2.46 million to 2.54 million. This looks a bit more dramatic on this chart than it actually is, right? This chart starts at 2.43 million. So it's not like the balance on exchange suddenly 5 or 6x, right? This is a granular scale over here. There is an increase, but it's not that huge in the grand scheme of things. What's also interesting is that afterwards we saw a decline. That decline though happened on Coinbase. So it's not really clear what the cause of this outflow is. It might not even be related to this whole UST crash because the sale was for Gemini and Binance. This decline though is on Coinbase. So the Coinbase balance went down. Now in the end, what's positive for Bitcoin here, right? Positive for Bitcoin would be a low balance on exchanges because that forces the exchanges to get their Bitcoin again, say over the counter from some miners or to buy this from other large whales, something like this. The lower the balance on exchanges, the lower the buffer for those exchanges is. If it was to approach 0, right, then we could see a real supply shock pushing up the price really, really high because then the price finding mechanism, it would all rely on very thin order books. So what you want to see in order to be bullish on Bitcoin is this metric going down. Now the UST collapse, of course, did not help with tightening the Bitcoin supply. So that's why in the end, also psychologically, we saw the Bitcoin price going down, right? That's here in black. We see the Bitcoin price development over the time. This shock, of course, had an impact on all of crypto, and it was since a very long time again a drop below 30K for Bitcoin. And so what happened because of this drop is that quite a few people realized losses. So this is a bit of a longer term chart. It starts in 2017 with the initial bull run during the ICO boom. And then we got the 2018 crash, right, where Bitcoin went down by more than 80%. We can see when we look here at this green and red line that during bullish times, people take profits. Makes sense, right? During bearish times, people tend to either hold or realize their losses during capitulation events. Now here we see the Corona crash, where also quite a few people freaked out. So they decided to sell or they had to sell due to liquidations. And then the recent bull run that brought us all the way up to almost 70K. A lot of the long-term holders, they took profit. Now we can see that the magnitude on this chart is increasing over time, right? There's more profit taking, more loss generation. Why is that? Because this chart is denominated in US dollars and the overall crypto market obviously rose in its valuation. So you actually want to look at this in relative terms, as in how are the profits and losses relating to the cryptocurrency market cap. And that's the next chart here. This is the relative realized loss. So now we're only looking at the losses and we look at this relatively speaking to the overall market cap, right? Realized loss divided by the market cap. And in here we can see the real spikes, the real depressions. So a lot of realized loss here when the 2018 bear market started. Then of course the final capitulation at the end of 2018. Then of course the Corona crash. And the summer sell-off of last year is also quite high actually, which is interesting, right? The price impact wasn't that massive, but the realized loss in percentages was pretty high. A lot of people gave up on their Bitcoin. And so this Luna blowout, it is less significant than the summer sell-off of last year. So what does that mean? It could mean potentially that we might not yet have seen the bottom. At least this was not a crazy capitulation similar to the Corona crash. People haven't yet fundamentally given up on Bitcoin. People are not saying that Bitcoin is going to go to zero. It's simply just a bear market. A lot of people think maybe we don't see this great price action from now. But there's no real complete capitulation happening. It doesn't mean that we have to see something like this, right? These are simply just opportunities that don't come around very often. If the realized loss peaks like this, then of course we have nice buying opportunities. But we can still see nice buying opportunities even without all of this fear. So seeing this would be nice. Not seeing this is not a reason though to stop dollar cost averaging into Bitcoin, right? The long-term outlook on Bitcoin, in my opinion, still looks very bullish. And with long-term, I mean several years. So if you're going to buy today and you're going to hold for, say, the next 3 or 4 years, I'd be very, very surprised if you see a price that's still around 30K. If you look at the long-term holders, so that's another video, right? When we look at the long-term holders, how are they buying versus how is the Bitcoin issuance happening over time? We see the long-term people, they DCA in faster. They buy up more Bitcoin over the long term than the current rate of issuance. And if you're simply patient enough and you can wait over the years, you can wait out those short-term traders, then over the long term, I think as long as Bitcoin doesn't get outlawed, you should be on the winning side of history. At least that's how I personally approach this. Now let's continue with the stablecoin market. Before we do that though, in case you're not yet subscribed and you enjoy this kind of content, feel free to do so. I do publish videos regularly. So here we go. This is how the stablecoin market reacted. And I find this very, very interesting. We see over here USDT, so Tether. We see USDC, which is Coinbase's or Circle stablecoin. We see BUSD, Binance's stablecoin, and we see DAI. Okay, so you probably heard about all of these stablecoins. So Tether, USDC, and BUSD are asset-based. So you've got some kind of real backing in a bank account of these dollar amounts somewhere. There is a question around Tether, if we've got enough backing for the stablecoin. It hasn't been disclosed enough. DAI is a little bit different. It's an over-collateralized crypto-based stablecoin. So you deposit, say, $1,000 worth of Ethereum, and then you can draw your DAI tokens out of this a bit less. So let's say that's $700 worth of DAI. And then when the Ethereum price drops too much, then you get automatically liquidated. That's basically how DAI works. And when we look at the development here, right? So these are now the prices of those stable coins between 95 cents and $1.01 is the scale over here. We can see that when UST depegged, that BUSD and DAI and USDC have been winners here. So people moved their UST to other stablecoins that were safer. But there's one exception here, and that was Tether. Tether also depegged. Tether lost in this. And that should tell you something, right? It tells you that the market is not as confident in Tether as a safe haven versus BUSD or USDC or DAI. Meaning if times are really, really tough, people also avoid Tether. The backing of Tether isn't that clear. There's quite a lot of FUD around this. Feel free to do your own research. I've also made a video on this just recently on this channel. If you want to be safe with your stablecoins, it looks like the market, at least, it does prefer anything but Tether. Now the peg has restored for Tether, right? We are pretty close to $1 again. So it's not yet game over. If Tether depegs permanently, then we will definitely see a very, very massive shakeout within the crypto space. Tether is the largest of the stablecoins. The question really is, that's the final bet here for Tether, is how much regulation will be enacted after the UST crash? Will there be something like a law that will prohibit centralized exchanges to deal in Tether unless Tether has completely disclosed and shown that they do have sufficient assets to back their stablecoin? There could be all kinds of hostile laws against Tether. So I don't hold Tether. There's no additional benefit to being exposed to this comparably riskier stablecoin. They are all supposed to be close to $1. So why take on this additional risk when you can have an alternative that's safer and that fulfills the same purpose? And so this Tether depegging event, it also spooked quite a few market participants. And so what happened is that the circulating supply of USDC suddenly crashed down quite a bit from 83 billion all the way to 75 billion. So people were redeeming their Tether. You can go to Tether.io, and if you've got at least 100K worth of Tether, then you can redeem this for the actual US dollar amount. And a lot of people have apparently done this. This is why the circulating supply of Tether suddenly crashed like this. But the redemption in the end was also the reason why the peg could be restored, right? If the redemptions would have suddenly been put on hold, then it would have been a completely different story. Then Tether might have permanently depegged. But given that the whole redemption process worked nicely, given that the supply could contract like this, Tether was able to weather this storm, luckily. Now, there are winners of all of this fallout, right? And this is obviously USDC. The circulating supply of USDC has increased, so from 48.4 billion to 51 billion. The circulating supply of DAI could not increase, which I find very interesting, right? The price went above $1, but people still were spooked of this whole algorithmic sorcery that happens in crypto land. So even though the way how DAI is generated is very different to UST, people still got somewhat spooked out by all of this, and the circulating supply of DAI fell. Now, what's happening here with Bitcoin now that all of this price drop was happening, that all of the balance on exchanges went up? What is the big money? What is the small money doing? For that, we've got this chart here. This shows us the accumulation trend score by wallet cohort. So this is a score that Glassnode calculates, and it shows us here on the left what are the largest wallets doing and what are the smallest wallets doing. And what I find fascinating here is that it looks like the small money seems to front run the large money. Look at how this blue shade here seems to somewhat have a slope. So it's first the small money that's buying here, and then over time the large money is following. So this happened here in November of 2021. A similar trend can be observed here in March of 2022, right? The small money was buying first, and then only afterwards comes the institutional money. And right now, after this UST crash, we can again see the small money entering. And so maybe we are just again in a period where we will see more and more blue, where the small investors are accumulating, and maybe over time the whales and institutional investors might follow. A very interesting chart. It's interesting to see the different people buying at different times. Now, if you haven't yet joined our public Telegram group, feel free to do so. Simply search for Bitcoin Strategy Channel within the Telegram app. We are now more than 2,000 people over there, and we discuss the Bitcoin market and various crypto trading opportunities over there. If you're looking for a more private group of around 100 people where you can ask me direct questions, then you might want to check out the premium membership. It is currently $49 US per month. If you decide to sign up yearly, you do get 2 months for free. Last but not least, don't forget to check out this video here. It discusses the general Bitcoin market. It doesn't just look at it from the perspective of the UST crash, but more from a zoomed out view, as in what can we expect of Bitcoin's price development over the years. So a very useful video. Don't miss it. See you over there, and thanks for watching this one. Bye bye.